encouraging higher private sector investment is a key way to bring about change. It can lead to better job opportunities, higher exports, essential public revenue, and better products and services for consumers. However, private investment in Pakistan remains very low and is decreasing. Other countries in South Asia are averaging 3 times more private investment than Pakistan. Foreign investment is also lacking, with current inflows around $2.8 billion less than they could be annually. Pakistan has also shown very weak export performance. Exports have fallen from 16% of GDP in 1999 to just 9% in 2021. Pakistan is struggling to diversify its economy and take advantage of huge opportunities from the global market. Export performance has a strong connection with productivity. Companies that are more export-oriented tend to be more productive than their domestic market-focused counterparts, and the more you export, the higher the chances in improvement in productivity. But if you continue to only service domestic demand, your productivity and quality of product will not grow. As a consequence of decades of protectionist trade policies and high import taxes, Pakistan's private sector has been shaped to look inwards to the domestic market rather than compete in the international market. While domestic competition may be limited, so are the potential gains. Ultimately, Pakistan's trade policies keep international finances flowing to other countries despite the country's size and investment potential. The lack of investment cannot be blamed on the private sector. Low investment is due to major problems with the business environment. Over 40 federal, provincial, and local agencies in Pakistan regulate investment and business activities in an uncoordinated manner. The risk of being stuck with layers upon layers of red tape in Pakistan versus the relative ease of getting involved in other competing countries. It's no wonder more investors are choosing the latter over Pakistan. This also encourages domestic private investment to focus on loosely regulated, low productivity sectors like real estate. And then there's the matter of repatriating money. Getting money into Pakistan is difficult. Getting earnings out of Pakistan is an unparalleled challenge. On top of this, you have consistent exchange rate manipulation and changing central bank policies. Investors don't know when or how much of their money they're going to see.
There needs to be a real effort to reduce the red tape, the regulatory barriers, the constraints to investment that the public sector is putting on the private sector. Only by doing that will the private sector be able to invest, will they feel they have the confidence to invest. They need a stable policy environment, and they need a business regulatory environment that encourages rather than discourages investment. Secondly, there needs to be a real effort to reduce the presence of the state in the economy. Currently, we have around 200 SOEs, even just at the federal level. Their assets are equal to about 45% of GDP, and many of these SOEs are operating in purely commercial sectors. They are competing with the private sector, they are squeezing out the private sector, and often they are loss-making and they're not productive. Much of that activity could be much better undertaken by private sector firms. Thirdly, there needs to be a real effort to provide firms with finance. At the moment, 75% of bank lending is to the government. Government's heavy reliance on borrowing from the banks is squeezing out the resources that should be available for private sector investment.
बिजली, पेट्रोल की गैस की कीमतों में बहुत ज़्यादा इजाफा हो चुका है। मिल मालकान बहुत परेशान हैं, उन्होंने अपनी फैक्ट्रियां बंद कर दी है। हम बेरोजगार हो चुके हैं। इस महंगाई के दौर में हम जाए तो कहाँ जाए, हम 2 टाइम की रोटी कहाँ से पूरी करें?
इतनी महंगी होने की वजह से और लोड शेडिंग होने की वजह से हमारा काम पूरा नहीं हो पाता, और जो हमारे क्वार्टर वगैरह मिलते हैं वो टाइम पे नहीं पूरे होते हैं। तो इसकी जो भी टैक्स वगैरह लगते हैं और जो हमारे मालिक हमें प्रोडक्शन वगैरह देते हैं वो नहीं पूरी होती है। हमारे जो रोजगार है उस पर असर पड़ता है और वर्करों पर भी असर पड़ता है।
Okay, thank you. So we'll get going with our panel discussion. So let me begin by thanking members of the panel for making time on a Saturday afternoon to be here with us for this important discussion on the role of private sector in the future development of Pakistan. I think it's probably widely understood, and Naji also made this point, that it's pretty undisputable that the private sector has to play a much, much bigger role in the future economic development of the country. The issue is really more about how. And that's where things have gotten stuck. There's lots of literature out there on what needs to be done. I think the challenges are really around how and why these have not happened and what can be done to have the right kind of private sector, not the sort of traditional consumer demand-driven private sector-led growth, more substantive, export-led, sustainable, inclusive economic development. So those are some of the points we're looking to cover as part of this conversation. And again, a big thank you to the panelists. We'll try and keep it relatively free-flowing. We'll sort of throw in a few questions and then see how the conversation goes. We have about 40 to 45 minutes for the panel discussion, and roughly the same time for sort of questions from the audience, and looking forward to that part of the conversation as well. So maybe if I start with a broader question, and maybe Khurram, if it's okay, I'll start with you. There's a lot of talk on sort of the efficacy of macroeconomic policies in Pakistan over the last years. And it would be good to get your views on how, in your opinion, macroeconomic policy in Pakistan over the years has impeded or supported private sector investment in the country. And more importantly, what, in your opinion, are the one or two key lessons that policymakers at this point can learn from the past experience in the country?
Okay, thanks, Zishan. The short answer to your question is that the government over the past few years has been supporting and impeding private sector development and growth using the same means. The same means have been used to promote it, and the same means have worked to impede its growth at the same time. I think the short answer would be that they've been doing it the wrong way throughout. Okay, so for example, I think the kind of means that have been used to promote private sector dynamism in Pakistan include things like the provision of cheap and subsidized credit, extension of tax breaks and amnesty schemes, targeted protections to specific sectors or specific enterprises in some cases, an artificially low exchange rate maintained for far beyond what the economy can bear, and so on and so forth. Taken together, what we end up with when we keep doing this over an extended period of time is a vast and sprawling apparatus of protection that's not perhaps operating as one continuous wall or barrier of protection the way it used to in the old days, in the days of import substitution, but it's providing islands of protection to specific groups, specific sectors, and specific producers. The results are there for us all to see. Okay, today we have banks that don't do any banking. We have exporters who don't export. We have power generation companies that don't generate power. We have fertilizer companies whose primary business is consuming subsidized gas, and so on and so forth. In short, we have a rather absurd and sprawling private sector consisting of groups, for example, and conglomerates whose structure doesn't make any sense. We've got a large conglomerate, for example, that is heavily invested in cement, in power generation, in textiles. And one is hard-pressed to figure out what are the synergies here until you see the apparatus of protection to which that capital investment is responding, and you realize that that's why it's growing in the way that it is. It's an odd-shaped mushroom. And you need to see the environment within which it has grown to understand why its shape is so weird. So what this has created over a time period is a large and sprawling apparatus of protection and rent seeking. And I think over the years, successive governments have sought to try and boost economic growth by tweaking this apparatus of protection rather than advancing or reforming the business landscape, encouraging innovation, adaptability, or promoting the search for market opportunities among the Pakistani private sector players. So I'm actually kind of struck by the absence of an ability to adapt on the part of Pakistani large-scale private sector players. I'm struck by the absence of innovation that has marked the development of Pakistan's private sector since liberalization began. And I'm struck by the very awkward structure into which it has grown. And the odd thing is that despite the fact that we have banks that don't bank, exporters that don't export, power generation companies that don't really generate power, the odd thing here is they all always make money. And that's the thing to then ask ourselves, that somehow or the other, we've given them an environment in which they make money no matter what. And then we wonder, why is it that they don't grow? Why don't they adapt? Why don't they search for new market opportunities? And I think therein lies the answer to the second question about what can the next government do. What it can do is stop doing this and recognize that it's choking and throttling the engines of its own growth by extending these protections, and search for the next growth paradigm outside of this sprawling apparatus of protection that has grown up under the cover of liberalization, and really take the business environment and the landscape more seriously as a target for reforms.
Can I add to this a little bit? Because I think, Khurram, you're making a really great point in terms of this is not something that is one past government or another past government. We're actually, over many, many years, we've seen a set of policies in place. And in response to your question, have they been effective? Let's look at where we are. We would not be where we are looking for ways of reforming towards a brighter future if any of these policies had actually worked. And to pick up one indicator, we started off talking about exports. And again, for any economy to grow in a significant way, you need to have your exports leading that growth. And exports, by the way, are critical because they are a signal that you're globally competitive. So you can't really grow your way out to success by investing in, let's say, real estate or other unproductive assets. You need exports. And so if we look at Pakistan and we start comparing, and we often compare to India, and nowadays we say that, by the way, that comparison is no longer valid, but let's go back. And this is within the lifetimes of many of us. Till about 30 years ago, our trajectories of exporting as a percentage of GDP were quite similar. But then something happened around 30 years ago that threw off. India went through a different trajectory, and Pakistan remained in the same position in which you have declining exports to GDP, you have all sorts of unproductive assets in place. And going back and understanding this is important because we can only reform to a brighter future if we understand what went wrong. So I think it's great that we're starting here. But why is it that in Pakistan, the rent-seeking and protectionism, which exists in India, in China, and almost every other, you can look at any country, and the elites there often are rent-seeking and push for protectionism, why is it that that has not resulted in Pakistan in a situation where you have larger productive companies actually creating goods of value that the world is actually willing to pay for? Why is it that we're still stuck in this space in which, despite the rent-seeking and protectionism that exists, despite all of the subsidies, we're not able to see this in terms of us generating enough revenue, enough growth to support this growing population? I think that's what we can start talking about and unpacking as we move through.
Yeah, Zishan, so just to add on what Khurram said, so the companies in the private sector, the primary motive is to make profit. And we did an exercise at Profit Magazine 2 years ago, and we compared the 20-year performance of the PSX and compared it to the US stock markets. And we found out that the returns in the Pakistani stock market outperformed the US stock markets by a margin. So my point, just adding on to what Khurram said, the companies were making a lot of profit. So, now obviously, now we know that it's unsustainable. But the companies were doing really well. The private sector was very happy doing what it was doing. And, so I think it's basically the incentives that you set, and you get the results based on the incentives you set.
Understood. And one point before I let you come in, and to be slightly provocative,
So a lot of what you said, of course, makes a lot of sense and is you can see it in history. But I assume, given that there is a private sector, given that there are certain sectors where there is significant export, that there must have been some things that have also gone right. So when we talk about lessons, are there certain things that we can say, okay, those were good things and we should continue, while also talking about all the things that were sort of not right that many of you have touched upon? So I just want to throw that in as a...
Thank you, Zishan. First of all, I would like to address your original question. What can we do on the macro level? Although I'm not an economist, so probably I won't be able to distinguish between macro and micro. It will be blurred. But there are two things. I think there's an elephant in the room which we have not discussed since the morning. First of all, we are talking about the absence of private sector in productive areas. There's a lot of private sector in non-productive areas. There's a lot of investment there. And that is where the elephant is. The documentation of economy. And in today's, age, it's not difficult. When Pakistan can run one of the best, and I've got my vaccinations in US and other parts of the world, when it can run one of the best vaccination campaigns using NADRA data, and even today the data is there. Why can't we start document? We have not even started. Now, why is that private sector, even the genuine private investors, I don't blame my colleagues in the business who want to make money and genuinely invest in the real estate because the returns are very high. So is there so much of demand that the returns are high? 90% of the population in Pakistan can't even dream of a house. So where is the demand coming from? It is the undocumented part of the wealth which is going into the real estate and making it more and more profitable. So unless you bring that wealth or start bringing that wealth into the mainstream, I don't think any policy reforms are going to help. And as the discussion goes on, I'll come back again and again to this point. And the other thing which I think the previous panel were discussing, and I was trying to put that question to Dr. Ishrat, but then we had to walk out for our discussion, was that we do have a problem with the Constitution or with the NFC award, but that is there to stay. And we recognize that the federal government has an issue of revenue collection which should be addressed. And the provinces don't do anything. We all know that. Why is it that federal government insists, and again, I'm not supporting the subsidies and other things, why does the federal government insist on giving the subsidies themselves? Why is BISP being funded by federal government? Why can't the provinces fund BISP? And if there are any lifeline consumer subsidies in energy sector, why is the federal government supposed to do it? Why doesn't the provinces do it? Like Dr. Sab was saying, if there are some incentives to be given for foreign investment or for industrialization, it should be the provinces. So that would save about 1.5 to 2 trillion rupees of money of the federal fund, which can be used more. So these are the two, I would say, reforms which I would think would help. But I will address the other, I think, very interesting points in the later part of the discussion about export, about what Khurram said, rent seeking. I think have very valid questions and very valid points, and we'll address them as the discussion goes. Thank you.
Thank you. Let me disagree a little bit with my colleagues and make the discussion more interesting. So if you all agree on things, then it will be very boring. We talk about the global competitiveness of our industry and why we have not been able to reach there. And some of the things, yes, I agree that the policy helped going investment in one direction or the other, or the real estate or some rent-seeking areas. But at the same time, you should see that when did our competitors, say China, India, or Vietnam, open up their markets? They did not open up their markets at a very nascent or early stage they opened up when they were already industrially they've developed a big base industrially, and that base was developed during their protection times. Pakistan never saw that protection throughout its life, and we always had this idea of a liberal trade system. When we started doing it in, say, 1990s, liberalizing our tariff system, we reduced our average tariff from 18% to 8% during the period of 2002 and 2007. And what happened in that period was that we started getting a lot of trade deficits. And that was a time when we started entering into the area of large trade deficits and kept on increasing. So the industrialists or the investors in that area would say that we have entered into an area of premature deindustrialization by liberalizing our trade too early than the industrial base would warrant. So this is one side. I don't say that, but we should also keep that in mind, whether with this kind of the industrial base that we have, we have that base strong enough to compete globally, or we still need some areas. And I don't say that we need a broad-based protection, but our industrial policy should not totally look down towards import substitution. We should look into the areas of efficient import substitution, which are essentially required to provide raw material to our industry, such as petrochemicals, such as steel, or I would say engineering and other areas. So we should not be very, I would say, take extreme positions when we talk of export-led growth. We should also keep the room for efficient import substitution with us. And this is the area. And when, yes, real estate, we should remove all these incentives to move away from industrialization. And the real estate is one thing which is becoming a large dumping area for untaxed money. So the one I think, quick thing to do will be to properly assess the value of our real estate when we are taxing them or when we are allowing them to be put in their wealth statements. Thank you.
Go ahead. I beg to disagree with Unusab, respectfully. So Unusab, my beef with your argument is that what you're basically trying to say is that we should focus on exports, but also keep room for import substitution. And I think that has been the problem. We're not sure what we want to make. Instead, we want to make everything ourselves. So we want to make things for export, and we want to make things for our own market. And I think in the last session, Dr. Saab mentioned about continuation of policy. And that is, I think, our main issue, that when one government comes in, so Razak Daud Saab was interested in import substitution. Then the next government comes in, they say, we shouldn't have import substitution, we should just focus on exports. Why don't we make up our mind once and for all? And I know there are people who are against the 5-year, 10-year plans, the Charter of Economy and all of that. I don't want to call it Charter of Economy, but my point is, you can't be changing goalposts every few years and then expect the country to prosper. So the countries that you keep mentioning, they had a plan and they followed that plan. So, yeah.
So, totally, I agree with you that there has to be a plan. And in that plan, there has to be a balanced policy. Import substitution is not used as a curse word.
So
can I add?
You can. I want to throw one more point in to also keep the conversation moving forward. I think both sides of the argument, of course, make good points. The skill or the judgment call is, okay, how do you transition from something that is very protected and leading to significant inefficiency and uncompetitiveness to something that is able to compete globally? I think all in one hit, most people would agree, would have, perhaps in the short term at least, significant implications. So it's that transition that requires the collective thinking. The one additional point, and you can then all come in, that I want to throw into the mix is around FX rates. This is a hotly debated topic in Pakistan, as you know, in other countries as well. The conventional theory is that, FX rates should be allowed to be completely free-floating, and there are many, many benefits to that. There are other schools of thought that in markets like Pakistan, that leads to unnecessary volatility, as we've seen in not just the last few weeks, but several years. So as people engaged in the private sector, with the private sector, I'd welcome your views on also what should be a sensible approach to FX. Should it be a free-for-all, or should it be something more managed?
Can I start with that?
Go ahead, please.
Okay, I think a sensible approach would be to not do one thing with your left hand and a different thing with the right hand. Okay, a sensible approach would be one where the government does not become a driver of foreign exchange volatility on the one hand, while trying to argue that it needs to intervene in order to mitigate that volatility on the other. So we have a situation right now where the government's own fiscal requirements, for example, are a large driver of foreign currency liquidity. Now, exactly how that works gets a bit technical, and we can get into that if people wish. But it's an easily demonstrable fact that for the past few years, the other elephant in the room, and there are actually too many elephants in this room, right? We'll see how many of them get called out.
As long as you don't name that one elephant. That's fine.
No, we will be naming the military too. Why not? For now, the fiscal requirements, the way that they're weighing on the economy, are one of the big drivers of foreign exchange volatility. Now, if the government wants to argue that we can't have a market-based exchange rate because we need to intervene in order to smooth out the volatility, well, smooth it out at the source, right? Rather than be a driver of the volatility over here, but then try and smooth it out where the symptoms are coming up. So that's one of the sensible approaches that.
Zishan, I'll like to add to that, since we do have some export businesses. I would, tend to agree with what Khurram has said. The exchange rate should be market driven, but at the same time, as I said, I'll bring it again and again. The volatility comes because of the undocumented wealth available in the curb market. If you control that, there's absolutely no need to, and then there is a slight misconception that devaluation helps exports a lot. I think an overvalued rupee hurts exports, but devaluation beyond the market, rate is not really helpful, first of all. And unless you develop a mechanism where it is adjusted by the difference in the baskets of currencies, inflation and all that, I think you're not going to go anywhere. I was just talking to Babar just before this session that there is a perception that the exporting firms, because of the devaluation, get a lot of windfall, which is true. But we confine ourselves to the boundaries of Pakistan. We don't consider ourselves as global players. What about the market cap or my corporate, which lost $200 million because of the, if I go and sell this company internationally, Pakistan will get $200 million less for the same assets, for the same productivity. So I think it has to be, one last point on that. Fortunately, we have experience in other South Asian countries. We have a company, associate company, which produces in Sri Lanka. And to cite that example, when Sri Lanka was going through all this turmoil, and they even defaulted, nobody, asked us to not pay for our, bills which were due. Even we paid dividends without any permission from the central bank. Because as we were talking, we have created a confusion between a corporate's wealth and the country's wealth. So if a corporate has to pay something, what has that to do with the, the government or the country? You have to think broadly on a global terms. Yeah, you shouldn't allow people to, swindle out countries' wealth or unnecessary dollars when the dollars are needed. But at the same time, why should there be those controls? The more controls you put in, and one last point, and then I'll hand over to Dr. Saiba. Vietnam exports $371 million. But nobody tells us they import, $359 million. But they import $371 million. So their trade balance difference is very minimal. So we have to liberalize some of the imports to do more exports. We can't keep on, converting cotton and exporting it. We need raw materials from outside and things from outside to go up the value chain. Thank you.
Mr. Adhik, that's a great point, and I wanted to pick up on this idea of being a global player and also come back to your point earlier, which we sort of dodged about what is it that we're good at? Can we actually cite something? And that's also deeply connected to this protectionism piece as well, with whether you're talking about floats or managed floats or fixed currency rates. So if you think about where is it that we're actually globally competitive, a couple of areas come to mind, and one of them, we may be upset with them a few weeks ago, it's cricket, actually. And so cricket, music, and what you'll see in these areas, these are areas that are actually exposed to global forces. These are areas in which merit and being really good is rewarded, and you can argue whether it's rewarded fully or partially, but the distortion is minimal. You can be a young, super talented cricket player, and there is a greater than zero possibility of you actually making it to the national levels in Pakistan, no matter where you are. Similarly for music. And so if we take that principle of actually encouraging and building on what we're really good at and supporting that and removing these layers of protectionism that often end up being distortionary in ways that are massively significant and have long-term impact, we can start building more clusters of global competitiveness and global success. But until we keep talking about, and Yunusab, I do agree that there is a time and a space for when we actually open up markets and expose everything to global forces, but protecting has not worked for us. As Khurram started off saying, we're looking at banks that are actually not doing much, companies that are not producing. We're really in a space in which what we have done before has not worked. And the consequences of that are so significant that we're all struggling coming up with ideas of where is it that we're globally competitive. So I think if we start with the principle of let's reward merit and excellence, and let's support that, let's put in the capital where it's needed, and let's put in the supportive policies, I think that's when over the next few, and this is over the next few decades, we will see some near wins, but these are long-term policies, and we can talk also about what that means and what's required there as well.
Please.
Coming back to the FX pricing policy, the policy should, I would say that policy should, the FX pricing policy should focus on the objective. What should be the objective of that policy? The policy objective should be to keep the exchange rate as close to REER, that is real effective exchange rate, that is possible. So where we should not allow the government to overvalue our currency, we should not also not allow the market manipulators to undervalue it too much. So that hurts both ways. If you are overvaluing it, you are hurting your exports or your competitiveness. When you are undervaluing it too much, you are also hurting the common man, bringing in the inflation into the play. So we have to, lobby or say, advocate for the policy, which is a balanced policy. And when we say that it should be market-based, we should see whether we have a perfect market. We have only few banks who fix the interbank rates and a few exchange rate companies that make up for the market rates. And we all know, and let me tell you very frankly, that all our exchange companies are nothing but front offices of Hawala Hundi business. And we in Karachi very well know about that. So putting our all stakes, the economic stakes at their hands is, I don't think, is a rational approach. We should have a managed float, where we allow the state bank to fix the rates periodically based on the RER. Thank you.
So thank you. I think good points made. And do you want to come in with something specific, or I was going to move on to a slide? No. Okay. I think good point made on both sides. One point I wanted to add from our side, we invest in Pakistan, as you know, IFC, we talk to foreign investors. As you also mentioned, Mr. Adhik, that too higher rate, too lower rate, both are detrimental. But actually, the other thing that is very, very detrimental is the volatility. It's the uncertainty. It's impossible to have a conversation with anyone. If you know it's going to go in one direction and there's some certainty, you can price that in as a foreign investor. If you have no idea there's going to be 10, 15% swings how do you price that? How do you price that risk? So I think the volatility piece is also very, very important, where your point on speculation also come in. So just building on that and maybe taking a more forward-looking conversation, one of the things that we've all... Sorry, did you want to come in?
Can I?
Please go ahead.
I did want to share a thought here. I mean, I think Yunus Saab has made a very important point here.
Yeah.
And it's a good point, and I agree with it, that it's worth asking what are we trying to accomplish with a market-based exchange rate, number one.
Yeah.
And I don't think that there is right now a good answer to that. One answer is that we are hoping that the exchange rate does not become a burden on our foreign exchange reserves that are already quite scarce. But that's not a complete answer, because the exchange rate does impact so many other things that other people are then very entitled to ask, well, what about the negative effects on inflation, for example, and other inputs? So I think that's a valid point and a good one, needs to be acknowledged. And but the key thing with a managed float is that managing the exchange rate is really about trying to figure out where the supply and demand points are going to meet. What you want is one thing, but what you can have is another. Can you have an exchange rate today that's at 240 or 250? Is that possible? We don't yet have a market, a foreign exchange market in this country. So it would be difficult to imagine a market-based exchange rate when there is no market as such. Everything is being run by dictate. So under those conditions, can we afford 250? I don't think so. Why can't we afford 250? Because we simply don't have the dollar reserves to make. So there's also compulsion at the other side, which is driving the conversation, not just our wishes. And I think one thing that is critical, and I'll end with this, one thing that is critical in thinking about the exchange rate is not just the dollar. We tend to think of the exchange rate as being all about the dollar. It's also about the rupee. It's about the supply and demand of rupees. Now, if you have a situation where your supply of dollars is draining out from your economy, while your supply of rupees is increasing at the same time, what is going to happen to the exchange rate? How do you expect to keep it constant under those conditions? So if you want a stable exchange rate, you've got to then show the responsibility to manage your fiscal equation better. So its weight is not being deposited onto the exchange rate and the money markets. And you've got to manage your your money supply situation a bit better to ensure that you're not increasing the supply of rupees at a time when dollars are draining out and sort of throwing everything out of whack. Yeah. So if you can do that, then you can have the things that Yunus Saab is talking about, which is a greater say in deciding what is it that we want with the exchange. But if you can't do that, then it's out of your hands.
Fair point. Okay. So I think as we now look forward, there's a lot of talk at the moment around increasing FDI in Pakistan, right? Everybody knows it's needed. FDI in Pakistan historically has been at low levels, and unfortunately in recent years it's almost non-existing. Some of the things we talked about around FX and other issues are all things that are impacting investor interest. What advice do you have for policymakers, foreign investors that are looking at Pakistan? What can or should be done to try and encourage greater foreign direct investment in the country? And do you think of any sectors in particular where there are opportunities? Can I have someone else come in first? And then
Sure. I just had a very short bit of advice for foreign investors. I would say get a subscription to Profit Magazine. Right, you'll get an insider's view into how private sector environment is being shaped.
All right.
Okay, Zishan, as we have been talking, I think, and we have been talking about this in the past too, even if we not look at the current scenario where there's a lot of volatility, a lot of uncertainty. Even in the past, we have not been able to attract any efficiency-seeking FDI. All the FDI which came in, which is not bad in the short run at least, is the market-seeking FDI. And we sometimes, you see, satisfy ourselves that it is because the perception of Pakistan is not good, but there are other countries in the world whose perception was not good, and they attracted a lot. So unless it is competitive, as Dr. Saab also said, unless we are competitive, why would somebody come here and invest for export? They will only come in if they think that they can make money out of it, and also there will be continuity of policy. So there could be many things. I think we have not invested in our human capital, whether it is our youth. If you look at the quality of education which we provide to 90% of our population in the secondary schools, it doesn't produce students which can really compete in the world. If I'm not wrong, and I think I could be a little off here, but I think of the 500,000 undergrads which we produce, unfortunately, and it's no fault of theirs, it's because of the mushroom growth of the so-called campuses of the universities and the fodder which they are getting from the higher secondary schools. Maybe 10-15% of them are employable. The rest, unfortunately, are not. So we can convert all that and also train our working class better to create those efficiencies which the world demands. This is one thing. And the other thing, there could be many things, and I don't want to take time for, I'll leave time for everybody else. It's once, if we have to start investing in our human resources, which is going to be amazing if we can do that. The second is, unless you address that, no matter what you do, you are not going to get efficiency-seeking FDI, and that is your structural reforms in the energy sector. Unless you do that, and I completely agree with Khurram that I don't think there should be any subsidies or protections or whatever, but the energy sector in Pakistan, the energy rates are not really workable because of the absence of structural reforms and because of the inefficient presence of public sector there. So these are the two things, if we start addressing that. And what we have, I think, missed in the discussion is, or maybe it has to come later, is we are lagging behind in the services exports. That's where our youth can come in. I think, and that's where our future is and a lot of hope is. We can really add a lot of services exports rather inexpensively if we can, empower our youth to do that. Thank you.
Yeah, I'd like to add to that as well. I think the question of how do we encourage FDI has to start from what is it that we actually need. And we've talked about our massive gap in our balance of payments, right? So which are the sectors and where do we focus? Obviously, energy is one in which we need to shift towards renewable and invest in that and make sure we encourage investment, and subsequent panels will talk about that, so I won't focus on it. Agriculture is another one, in which, again, you have 250 million almost population in Pakistan growing that provides this massive opportunity to create value and also export potential, but again, import substitution as well. Again, a subsequent panel will talk about that, so I won't focus on that as much, but I'd like to pick up on the third one, which you also spoke about, this whole services aspect, in which there's a lot of talk around we should encourage tourism in Pakistan, essentially what is services. And I think within that, we really have to recognize that a lot more needs to be done in Pakistan at a fundamental level. You can't decouple the fact that women in Pakistan are marginalized in significant ways and then say that, we leave half our labor force out, but yet we want the service sector to grow and we want to encourage tourism. We can't leave out the fact that we have a problem with terrorism. We have a problem with volatility locally. We can't attract people through we have all the fundamentals in place, but then enacting the right policies that make sure that in this particular area, when we talk about service industry, what is it that needs to be done? Those are pretty clear, and we need to start doing those as well. in order to
one
capture that.
point I want to sort of throw in the mix. So many of the things that are needed to facilitate investment, whether local or FDI, are well understood. Sort of business enabling policy issues. There used to be a doing business index. Tons of money has been thrown at this. Consultants, our institution, including others. Why is it that while other countries, and you gave some examples of as well, have moved on that, but Pakistan, for some reason, is still struggling on all indicators when it comes to business enabling environment? Is it a capacity issue? Is it a vested interest issue? Is it the private sector saying it's not my problem, it's the public sector's problem, and the public sector saying it's not my problem, it's to your point on human capital, it made me think, okay, well, is the private sector expecting government to set up universities? How does the government pay for that, right? Is the government expecting the private sector to do it? So we've got to think about, okay, why these things are not happening. So maybe you want to also address that.
Investments or the business, basically they require two basic things. One is the political certainty, and the other one is the continuity of a policy. And the first, to have a policy. So then the policy, then continuation, and then the political certainty provides that environment. As we talked about the FDIs, the FDI normally follows the path of the local investors. So if we find, we should ask ourselves that the areas of investment that we are offering through SIFC to foreigners or foreign investors, is our local investor going in those areas? Can we say that in mining and mineral development or agriculture processing, our big companies have been investing in the last 5 years? The answer is no. So then there is the absence of that ecosystem that the investment requires. And that I said that the proper policy and then continuity of that policy and some political certainty. We, as very rightly pointed out, that we have three areas of resources or the natural resources or the advantages that we can work on. One is the youth bulge that we talk about, and then not trained or developed skill-wise, it is of no use. I mean, we have a lot of potential there. The second potential is our agriculture sector, that our agriculture sector, one of the lowest in terms of productivity, and by just increasing the productivity that we find in India just across the border, we can get a big enhancement in our growth. And third one, which is largely, totally, I mean, I would say it's totally underutilized or no attention has been given in the past so many years, is our mining sector. You see, the Recodic is a classic example on what's going wrong and how it can be improved. Our judicial activism made them run away, went to the courts, brought to us a huge verdict of $6 billion, I suppose. But then we inducted our private sector into it. We made a group of 4 companies. They negotiated with Barrick Gold. And Barrick Gold, despite whatever we are talking about is wrong with our investment policy and ecosystem, they came back. So where there is a profit, so the investment would always chase where it can make profits. So this is where we have to work on that one. We have to have proper policy. Then we should encourage our own private sector to come into those sectors, and then they will bring in the foreign investment. So this is going to be the path.
Okay. If I was a foreign investor, I suppose there would be 4 things I'd look at, right? I would note, for example, when I look at Pakistan, that back in between 2019 and about early 2021, the rupee fluctuated between a band of 150 to 155, and broadly speaking, right? And today it's fluctuating, or it has touched across 300. Now it's sort of coming down. We'll see whether it can sustain those declines. But I'll notice, for example, that in a couple of years only, the rupee has, the value of the dollar has more than doubled versus the rupee. And I'll ask myself, do I really want to hold rupee-based assets in a time like this? And do I really want to lock myself into long-term rupee-based returns in a time like this? And how do I secure my investment from this kind of a trend? And I will probably then seek my returns to be dollar denominated and dollar indexed, in which case I'll need to worry about, well, at what level should I then peg the dollar in the contract that I'm signing with them? So exchange rate volatility would actually be a big factor in my decision. The other thing I would look at would be the skills of the people that I'm coming into. Whatever enterprise I'm bringing into this country, do I find the skills that are needed to operate that enterprise available among the population? And above the skills, then the business, the work ethos that comes with it. Will I find all the right people, the kind of people I need in order to successfully run this business among this population? After that, I will ask after the credibility of the institutions of the country in which I'm investing, especially if my investment is large and of a long-term horizon. So credibility in terms of contract enforcement, security of property rights, dispute resolution. Are the institutions of this country able to withstand the kind of credibly enforce these kind of requirements? And the fourth, I will look into the outlook on political stability and instability. Now, in all four of these, I will find the country lacking in important ways. So if I'm still determined to come, if I still see the opportunities, I will look for dollar indexing my return. I will say, well, I'll need to import many of the skills that are required to run this. If I'm not comfortable with the credibility of the institutions, I'll seek to place my investment above these institutions, above judicial review, above regulatory injunction, above parliamentary interference of any sort, or executive interference. And if the outlook on political stability is not good, if it's not inspiring confidence in me, I'll seek buy-in from the permanent interests of the country, which I suppose would mean the military or the judiciary in this case. And we've seen at least one example of a foreign investor actually say that I want this agreement that we have reached with the government to be placed before the Supreme Court, and let the Supreme Court first say, yes, this is legal and this is constitutionally within the bounds of the Constitution. That was an extraordinary moment. That's the moment where the foreign investor is saying, get buy-in from your court before we come in, right? Not after. And that was an extraordinary vote of no confidence in the credibility of the institutions of this country. Given all of, if you want to rectify all this, one way to go about it is institutions like the SIFC, where you just carve out one portion, you say, okay, in here you will get all four of these. All those operating inside this space will get these four. Everybody outside this space is left to their own devices.
So go ahead.
I'm just quickly to conclude, the problem with doing that is that you might get investors coming into that space, availing that window, but it diminishes confidence in everybody else operating outside, because those operating outside, such as the ones that Yunusab is talking about, will be looking in saying, aren't we entitled to, credible contract enforcement and security of property rights and dispute resolution? Are we not entitled to any of the other things that they are saying, And then they'll seek buy-in into that space as well. So that's one problem with carve-outs.
I think all good points. On the FX point, I would slightly nuance that by saying that not every investor would want to have dollar index returns. If I have certainty of currency, whichever direction is moving in, I can price it in. So I will get a much higher return in rupees, but a dollar return that is, but again, this the volatility piece that you mentioned. But I want to move the conversation, since you mentioned SIFC as well, and in the FDI context, there is a big push now around privatizations, private sector participations, several SOEs. I think you've read in the note, there are 200 SOEs only in the federal government and several in the provincial government. So what's our view on the right way forward vis-a-vis bringing private sector participation towards these SOEs? Again, there is a broad understanding that it has to be done. Huge loss-making SOEs like PIDE and others. But it's a tricky area. So any views on that? Any advice for policymakers on how they can think through this transition from SOEs to private sector? And I've been waved at to say we have 5 minutes, and so we'll take this as the last topic and then open it up to the room. So,
yeah, privatization, we can't argue that it should not be done, but there should be there are two objectives that and now we have been doing privatization since 1990, so we have some experience in that area. And learning from those experiences, there are a couple of things that we can work out going ahead. As the privatization go, I think there's two objectives. One is getting rid of the losses in our budget, and second is to bring efficiency and better service, welfare of the consumers. And what we have been doing all these years is that we start privatization in the name of getting rid of losses. But in the end, we first privatize those companies or those entities which are profit-making. So we increase make the losses larger, or the whole is bigger. So we have been doing privatization, but at the same time, our losses from SOEs are increasing because we are basically privatizing the profit-making institutions or the SOEs. So this sequencing need to be done better if we want to create a positive impact on our fiscal side. The loss-making should be privatized even at zero price, I would say. But get rid of this first. Second is that we should try to package our the entities in a way that the more and more bidders can participate. What we are doing today is that, like what we did in K Electric, that we privatize the entire one monopoly, government monopoly, into a private monopoly, and the entire asset system was privatized. Now, this requires a big investor. And if we try to, say, do away with all our power companies, all discos, it will require some $20 to $30 billion of investment. So if we try to do it now, we say that we are trying to privatize all our entities tomorrow, we are not going to attract so much investment or bidders from international. So we have to package them. For example, a power company can be divided into many parts so that the local investors or the smaller investors can come in. So you have large number of players coming into the privatization. So doing it rightly in a way which does not convert one monopoly, government monopoly, into a private monopoly, and secondly, packaging in a way that in a manner that it brings more investors, and the packages are doable for a small investor or a medium investor as well. So these are one or two points that I'll quickly make.
Yeah, just to add on Unusab, I think is absolutely right. The problem with privatizing the SOEs is that you don't want to create another monopoly. And so yes, the public sector is very inefficient, but our private sector is nothing to write home about either. And so most of our private sector, if you look at it, they're quite inefficient, unproductive. They don't like competition. They don't like to take risks. Khurram was mentioning one conglomerate. I'll mention the other big conglomerate who's been into all sorts of industries, but all of them were protected in one way or the other. Either in energy, where you would get fixed returns committed by the government, or you would get subsidized gas, or you would have a protection on the chemicals plant side. But everywhere, our states are not interested in taking risk and in competing. And I think not just the protection bit, I think one thing we've missed in our conversation is the role of the Competition Commission of Pakistan. So just this year, we're sitting in September, not a single order has been passed by the Competition Commission of Pakistan this year. For most of the year, it was, I think it did not have enough members, so it was basically ineffective. And when you look at the cement sector, when you look at so we did a story on the tractor industry, and there's WhatsApp messages where they're deciding very casually, they're colluding as if it's not a big deal. So as far as the competitiveness, and you mentioned that how can we make our sector, our industry competitive for export. I think even if our regulators, the Competition Commission of Pakistan, the SECP, they do their work properly, even internally, while serving the local market, they can at least become competitive, and they can obviously then, in due time, take their product to the export market.
Okay, I think I would comment on Yunus Saab's point. I think we'll have to create a combination. While I agree with him that we can't simply sell the profit-making SOEs, but we have a huge burden of debt. So we have to create a combination where there is some profit-making, which are actually not very efficient, but still they are profit-making entities, have to be at least partly privatized and also get rid of at a zero value. But one thing more which I want to point out is that on one hand we privatize, and then we go back and take the public sector into the same area. I'll give you the example of banks. We privatized all the banks. We still kept National Bank. I don't know why. But then we created a Punjab Bank, a Askari Bank, a Khyber Bank, a Sindh Bank. So what are we doing? So I think we need to. And last point is to comment on what Babar said. And I don't represent the private sector as such, but coming from the private sector, I think there's a lot of criticism, and it's a valid criticism. And I will add to that criticism, rather opposing it. Our balance sheets are not transparent. That's one reason I can surely tell you that you don't attract FDI also in joint ventures, and you have other problems, and the banks don't lend because we don't have, I'm not talking about everybody, there are some very good corporates, but generally speaking, the balance sheets in Pakistan are not transparent. So I'll add
I think all good points, and I think we can go on, but we're being asked to move to the public session. But just a couple of points I wanted to react to what you said. So for us, when it comes to moving from public sector or SOEs to private sector, it's not one solution fits all. There are some where it would make sense to monetize instantly to pay off some of the debt. There will be others where some sort of a hybrid makes sense. And there are others where they need to stay in the public sector and be improved before you can bring private sector. Otherwise, you won't get anything for it. So I think for us, the challenge really is not that you want to have many investors, you want to have the right investors who are in it for the long term. And I think there's a slight differentiation there. And regulators in that sense have a huge role to play when you outsource. Okay, so we're going to now try and open it up. I'm told that there's a mic somewhere. Tobias, I'm looking for you. I don't see you. Okay, so we have a gentleman here, and is there one on this side? Okay, so several hands going up. Why don't we start with this lady at the front? Please introduce yourself and ask your question and comment. Thanks.
Okay, my name is Sahar Malik. I'm the current president of Women Chamber of Commerce, Lahore. Actually, I just wanted to have a comment about why we are not attracting FDIs in, Pakistan. One of the major reasons is that we don't have accountability for the person who's spending money of the stakeholder. Actually, that person is not under any accountability. That person needs to be a license holder. The procurement person, that needs to be under a license holder. That is something which will actually give a very, positive approach and security for a, stakeholder, that the person who's spending their money, that person is a license holder. The procurement person needs to be a license holder.
So, sorry to clarify, when you say the person who's spending the money, is that a public sector person or
both?
Okay.
Both. The person actually who's looking after the value chain and who's actually spending and spending money on the raw material or the engaging suppliers for the company, for the stakeholders. So that person needs to be, the license holder.
Similar to the point you made around sort of trustworthiness of financials and transparency, etc.
Yes, and then we are talking about the corporates and why the import-export. The other thing which I really want to focus on the growth of the SMEs. I see that we are giving a lot of training and we are really focusing on the technology. And technology is all front-end. The back end is not solid, and we are not giving trainings about the, supply chain and the value chain, how they need to actually have a sustainable, value chain, and how they can actually have
human development, the point that was being made.
Yes, that is one of my another point which I wanted to make. And the third is that we are not focusing about on the product development at all. So these are the things which we really need to focus on, and I think that will really going to help. Thank you.
Good points. Maybe we'll take one from this side. Maybe the gentleman. Oh, sorry. Please go ahead.
Assalamu alaikum. So my name is Karishma. I just wanted to talk about the SMEs and the grassroots level entrepreneurs or the businesses that have been working. So I belong to KP, so I'll talk about the perspective of the KP. Basically, one of the constraints mentioned in the booklet was regarding the access to finance. So we have a lot of grants available in the KP, and it's great to mention that it's particularly for the women-led startups or women-led SMEs. And a lot of grants have been distributed as well within the different SMEs as well. But there are no expansion we have seen in those businesses. We cannot see any unicorn out of the KP for the private sector. Why? Because there are no regulations to track down those grants, the free money that have been distributed among the private sectors. I think we should have something tangible that can make the private sectors feel accountable for the grant that they have been getting. Second, the access to finance regarding the loans. So the banking policies are really hard for the people with low literacy rates. So I've been working with the rural communities, and they have been doing a great expanded businesses, product-oriented businesses, and they have the potential to grow as well. But then connecting them with the banks seems like the process seems so daunting to them that they feel like we're talking to some aliens by getting all the policies filled by the bank sectors. So what can be the possible solution to make the policies easy so that they can easily access to the finances? And also, as earlier she mentioned, one of the ma'am, that the digitalization is on the front end and not at the back end. So we have a lot of loans applications for SMEs, and we have a lot of opportunities, and women are encouraged to apply, and also they are digitally available. But then, unfortunately, making a website for loan application does not make the process truly digital. I mean, we have been applying to a lot of loans and applications and funding opportunities, but we never get the response of why we're not getting it. I mean, if I'm not eligible, what are the reasons that I'm not eligible? What are my possible loopholes that I can fill out to, to make myself eligible for the next time? So I think possible feedback should be given. And if they claim that the process is digital, I don't find it digital, because we have to visit banks like quite a lot of time to make sure what's happening with our application, what's happening with the finances that we have been applying for. So yeah,
thank you.
Thank you.
Very, very good points. Yes,
okay.
Please go ahead.
Okay, thank you. I think you made some very good points. Zishan, the problem is that, as we know, in Pakistan, we have one of the lowest SME segment, and their financing is simply not available. And it's nothing to do with the government crowding out the... There are two things. One is the banks obviously are risk averse. They don't want to lend to SMEs. Most of the SMEs are either not documented or they don't have any assets. In most other parts of the world, it's the supply chain financing which has helped SMEs. In Pakistan, what again happens is that because most of the supply chain is undocumented, so unless you're working with a multinational or a good big corporate, your supply chain documentation is not there. So the banks, so one, I think again, we need to go towards more and more supply chain documentation, but at the same time, the regulator has to come in, and there should be some government intervention, affirmative action, where the banks are, you see, they are part of their portfolio, SME portfolio is covered for their losses, and they are incentivized to, you see, lend to SME more and more. Otherwise, we will.
Yeah, I think a good point. And before you come in, I just want to add, one of the issues that we hear quite a bit is, in addition to the complexity of applying, there is an issue around creditor rights, insolvency, enforcement of security. So I think it's very common here to talk about the public sector crowding out the private sector when it comes to, I think there's definitely truth to that given the numbers. But there is also seems to be an issue about a bank's ability to get its money back, particularly from non-corporates, given the challenges around enforcing security. So it'd be good to get your views, and perhaps any financiers or SME owners in the audience, as to how big an issue this is. Please.
I think the lady has pointed out to a big deficiency in our papers, policy paper today. We have not talked about SMEs, and our papers do not talk about SMEs. So we should include this in our policy papers, that all our policies, whether it is an industrial policy, is an investment policy, or it's a taxation policy, those are all focused towards big investments. So SMEs are already, which SMEs normally, or in the internet global experience, is that the growth comes from, or the expansion, industrial expansion comes from SMEs. So SMEs' participation in the economy should be in our policy paper. Thank you.
Very good point.
And just one final point there. I think when you spoke earlier, you talked of two things. You talked of grants and you talked of loans. I think it's really saying something that there is no equity investment that you're talking about. In a space where your policy rates are at 22% and you're looking, again, the cost of credit is extremely high, even if you find it as an SME, which you won't because of all of the reasons cited above. You can't grow through just grants and loans. Growth requires capital coming in different ways, ideally through investments as well. So there is something around deepening our capital markets as well that is a part of this. So
absolutely right. And
Zishan, if I can also add something.
Go ahead.
So we've been talking about, and I read that in the policy paper as well, that the private sector, the government is crowding out the private sector. I don't think that's entirely true. I think it's just a buzzword we keep saying. So if you look at the numbers, the State Bank of Pakistan lent the banks around 7 trillion rupees in the last year and a half to lend it further to the government of Pakistan. So, and in fact, it's a little technical, the reverse repo of securities, but they were, so State Bank has been printing money essentially, lending it to the banks, which they can further lend to the government of Pakistan. Now, the depositors' money is in fact available for the banks to lend to the private sector. In fact, a year and a half ago, Shaukat Tareen, when he was the finance minister, they introduced a tax to promote lending to the private sector. They wanted that 50% of the advance of the deposits should be lent out to the private sector. Otherwise, it will attract a tax. It's another story how the banks made sure that they still got away without lending to the private sector and didn't pay the tax either. Okay. That's again a regulatory matter. Okay. But yeah.
Understood. No, makes sense. There's lots of questions, so I just want to make sure we take them. Where's the gentleman with the mic? It's okay. Yeah, please go ahead.
I'm Dr. Samina Naveed from Department of Economics, NUST. So I have actually 2 points to comment, and then I would like the panelists to respond on those 2 points. The first one is actually related to these core drivers or the factors which have been mentioned in this report by the World Bank. And I think there is no disagreement on these important factors that are listed there, whether they are in the form of the anti-export bias or the overvaluation of the exchange rate or the credit facility. And if we talk about even some traditional or the conventional kind of the determinants, we can add also those to still these points, that cost of doing business or decrease in the productivity. All these are actually the hampering factors for the export performance of the Pakistan. Now, actually, I think we all know about all these things, that academic research as well as the research by the government think tanks, that all will also be leading to these kind of the identification of these factors. And then they become a kind of the guideline principles for the policy documents of the government. We have actually right now the strategic trade policy framework for the 2020 to 2025, which is right now operational because this is 2023. And we have very nicely crafted and drafted policy guidelines and the ambitious kind of the targets that we need to achieve at the end of 2025. And still, if we talk about the 2023, not 2023, sorry, 15 to 18.
Sorry to interrupt. We're very short of time, so if you can keep the questions and comments to the point.
So my question and concern is actually that there is actually a big failure in terms of achieving those policy targets at the end of the day. Okay, in the 15 to 18, we write down we will be achieving 30 billion target revenue for the government. We didn't achieve. Right now, we are saying that we are going to move the exports to a level of $58 billion. Not at all, I think that we can meet this target. And for that, you need to have at least $6 to $8 billion per year export performance to reach that target. So why do we at the first place set these kind of the irrational and ambitious targets? And number 2, I think Chairman Advisory Board is here with us. So he can answer to me that, sir, is there a kind of the surveillance or the monitoring that we can conduct in order to have a regular kind of the progress report on these policy guidelines? which is going to tell you that at the end of the day, how much percentage actually improvement or attainment we have done. And the number 2 is actually, I don't know कि panel में किसी ने इस पे बात की या ज़्यादा नहीं, लेकिन आप लोगों की starting वहाँ से हुई थी that why import substitution policies have been failed in case of Pakistan. So the political economy argument of the trade policy, where we find a significant intervention of these lobbyists and the influential groups, that is also very much important in actually leading us to kind of this policy failures for import substitution. Thank you so much.
Thank you. So we'll take a few questions because there's lots of them, but one request would be to please keep them short. We really are very, very tight on time. Thank you.
So I'm Naveed Arshad from LUMS. I think one thing that missed in all this debate is the part of the value addition. We just keep on not importing and exporting the same dollars. So value addition is equal to, I think, the R&D spending that we are doing. Our R&D spending has not been great, but has not been bad either. The reason that the R&D spending has not been into prioritization or startups is because many of the R&D spending requires to cross a valley of death that we call in the startups. Unfortunately, 80–90% of our projects that we get funded from HEC and others are just shelved because there's no funding to actually take them forward to the level where what Aisha is saying to make them attractive to the venture capital fund. So I think there's a need for some grant funding to make sure that all this R&D spending actually becomes something. Thank you.
Good point. Any other question? So maybe we take 2 more and then we'll try and address them in the group. Go ahead.
Assalamu alaikum. I am Jahanzeb Malik from State Bank of Pakistan. So I would like to learn about what are your thoughts about the economic uncertainty or political uncertainty as a driver of exchange rate. Because we know in the theory that people or investors usually move towards the safe havens during the uncertain time. If we continually remain in the economic uncertainty or political uncertainty, then I would like to learn from you. Thank you.
Okay, thank you. I think most would agree that political uncertainty is a key driver of FX uncertainty. Please.
Thank you very much. I think there were far too many independent topics crammed in this session. First, I'd like to clear a misperception. I think respectfully what Mr. Daga said. I started working in FBR from mid-70s. And I've never seen Pakistan a liberal country, a liberalized country, in what he was saying. We were about the same as, rest region. But what started changing was that in mid-80s, 90s, other countries started liberalizing, and Pakistan's pace was very slow, except for a little time, what Mr. Daga mentioned about 2002. And that time, our exports doubled. But obviously, the trade balance also worsened. But, other countries, they don't all the time look at trade balance. For example, India, even at this time, trade balance minus 150 billion or something. But they go on. China and India, Vietnam, etc. Vietnam had no industry, just 200 million exports, but they opened up. Pakistan has been fixated on getting a GSP plus duty-free, and other countries got into this regional integration or international hyper-globalization. Pakistan has stayed out, but it's a misperception in our bureaucrats' minds, in our businessmen's minds, that we were very open. So we have gone into premature industrialization. So we need to stay closed and import substitution. Thank you.
Fair enough. Okay. Tobias, you want to come in with the online questions so we can take them as a group, if you want to give Tobias the mic?
So we have a couple of questions. One from Vasim Mansour. How do panelists see the role of public-private partnerships in transforming the private sector in Pakistan? And the second question, the esteemed panel may like to comment on the approach under the SIFC to attract investment and what specific steps are needed to make this a positive development for the private sector. And that's from Haider Sahel.
Thank you. Okay, so please, let's try and address
I think to the gentleman here, I think he has a very valid point which we have not discussed and probably is not in the policy papers, is the, while we talk about, removing the barriers on import, we don't talk about regional integration. Pakistan is missing out big because we are not integrated with SAARC. Everybody else is. And we don't even want to take the name of India, and we think that it's a neighboring country and all that. I think the businesses have to be open. We have to be open to the competition. We'll get Pakistan. I keep saying this, Pakistan, the biggest strategic advantage Pakistan has is that no country in the world has 3 billion people on its borders. And we are still sticking market. So I'll stop at that.
It's a very good point. Do you want to come?
Yes, regarding the Policy Advisory Board, it's a new organization. You know that we just started last year, and we are developing that capacity. You're right, very soon we will be working on monitoring the targets and plans and policies and how the government, and we'll be putting up periodic criticals on that. As regards what Mr. Manzoor was saying, that we do not say that we have to grow or we have to develop into a closed economy. Right? So having said that, export, we want our economy to grow through exports. But is export a unilateral decision on our part, or we have to export into markets? So now we have to talk about what market access does Pakistan have. Pakistan has very limited market access as compared to its competitors. For example, do we have an access into ASEAN? No, we don't have. Do we have access into European Union? Just because of GSP Plus, we don't have a free trade agreement with them. The only free trade agreements that we have is with China, Indonesia, Malaysia, and Sri Lanka. So that's it. So having very, I would say, unrealistic projections about our exports growing with such limited market access, and then liberalizing our imports, I think this is where we have to have a balanced approach. So as we increase our market access and get access into markets, we can liberalize.
So a follow-up
openly.
Good point. Follow-up question. Why doesn't Pakistan have the access that other countries have? Is this a policy priority that whoever comes in should really elevate and have a free trade agreement?
Yes, it is both. It is because I've been trying hard to get access. When I was Secretary of Commerce for 2 years, Pakistan is in a smaller economy. So the world is now doing. When I was trying to discuss free trade agreements with EU, with Australia, with US and big economies, they all said that they are busy with so many free trade agreements with so many more important economies than they would like to spend time now with Pakistan. Let me tell you very frankly. And then it is also a political decision on their part, which countries they do want to favor. So they like, and we were, with our competitors having such big advantage over us, liberalizing trade would only mean liberalizing imports. So we have to first talk about export market access. So this is where.
I think responding to that very point, I think it's partly a failure of our foreign policy. Bangladesh had access to China duty-free before Pakistan had an FTA, to ASEAN, to Canada, to Japan. European Union is the same. So there is something wrong with us. It's not that we can't do all those things. I think there's something wrong with our policy. We need to understand it.
No doubt.
Why don't people, accept us as a trading partner? There is something wrong with us. We should accept it.
And with 250 million people, we are not a small economy.
Yes, it is a political, I think, diplomacy failure. Yeah. One part, I totally agree with him. And secondly, there has been our own, there are globally we are not, as very rightly said, regionally we are not integrated. We have only one border which is comfortable doing trade with us, one of the neighbors. So we have closed all our regional borders due to some issues politically. So very rightly, Foreign Office has to play its role.
So I think for the policymakers coming in, a message around the table and around the room is that this is something that should be prioritized. Otherwise, all this talk of export to two markets or whatever Pakistan has access to at the moment will only just be talk, and will go to the lady's point on over-ambitious targets. So I want to make sure we cover a couple of the other points. I think there was a comment on investment in R&D. I think most people would agree that more of that is needed. I think most people, at least on our side, would say that this is space for private capital, so VC funds, et cetera, as opposed to public sector. That's certainly at least our view. But let's talk a little about the question on SIFC's approach, since that's on several people's mind. What do you think SIFC or the people that are running it should keep in mind if they really want to have a positive impact from that platform?
So while I think SIFC and any sort of entity that has the right intent can have a positive impact, I think we do need to step away from this idea of there'll be a magical quick solution to anything, or that any one entity or one organization or one forum will actually solve anything, because we're at this point, and this is where, by the way, Khurram and Babar, the media as well, and our politicians and our leaders, we need to start speaking the truth and being really honest about this is where we are. It's going to require a lot more than one entity and one set of policies and one set of incentives for increased investments to actually pull us out of this hole. It took us decades of poor policy making and poor decision making and all sorts of failures to get here. We need to acknowledge where we are. I think often the conversation ends up going into these sort of dangerous fallacies, I believe, in which we're too big to fail, or we have this and we have that, and no one will let us fail. That is absolutely not true. It is the time to make a set of really hard policy decisions. One of them may be around empowering SIFC to set the right incentives and make sure the right macro stability is given to attract investment. But I think it is a lot more than that. And it would require a lot more time to see whether SIFC has the teeth and the ability to actually do what it's positioned to do.
Yeah, so as for SIFC, one of the main initiatives is corporate farming. And when they started it out, it was challenged in the Lahore High Court. It was struck down. So they said that the armed forces has no business dealing with agriculture, and also the Punjab government can't sort of give the land to. Anyways, later on, Lahore High Court changed its decision, and everything was okay. Now the petitioners who had challenged this did not go to the Supreme Court. And they didn't go to the Supreme Court because they're afraid to go to the Supreme Court. My point is that, 5 years down the lane, when things are, when it's a different government, different dispensation, I don't think, entities like SIFC, they are permanent, and they give that sort of confidence to the foreign investor, or even to the local investor, that this is something that will protect their interests. And like Khurram had said, everyone needs to have the same sort of level playing field, and we really don't know what will become of SIFC.
So I think to further Baba's point, I think we are cash strapped. We need dollars, and we are all desperate to find solutions. And so SIFC appears to be a ray of hope. But my fear is that going in the long run, it will end up, creating more vested interest, can create more issues for Pakistan than solve it. I hope it doesn't, but that's my fear.
Okay. Do you want to comment on this one?
Well, I mean, I think there's a reason why they are launching the SIFC, and I think that is because from some foreign investors, they have received the feedback that we don't have confidence in your business environment. So if you can provide us with the kind of protections that we've seen other foreign investors, suffer for the lack of, then we would be willing to invest. I would urge them to take that feedback seriously. Now, you don't take it seriously when you say, okay, we'll create a privileged category of investor. You can come in through this window, and you will be above the judicial system. You will be above the regulators. You will be above the entire sort of institutional apparatus of our country. And as a result, you'll be protected from the vagaries that others are subjected to. The right way to take that feedback is to come back and reform that environment so everybody can benefit, rather than only one specialized category, privileged category of investors.
I think that's a good point. It's the fundamental reform that, as you say, will sustain over time, whatever comes. Okay, There was a question on public-private partnerships, so maybe we can take that. I want to make sure we take at least another round of questions before we run out of time.
Can I just find, there was a question from the State Bank that I would like to take as well.
Go ahead, yeah.
We can take it now if you wish, or
why don't we take it in the next round? So
okay. It's already been asked, but at some point in this round.
Why don't you go for it?
Janzeb Saab from the State Bank had asked that economic and political uncertainty, and if I understand your question correctly, you had said that the flight into dollars, to what extent is that being driven by economic and political uncertainty? So the flight into dollars is an adaptive behavior to the uncertainty. It is not a cause and it is not a driver. If you want to know the cause, I would urge you, when you go back to the State Bank, just start asking them a very simple question, your colleagues over there. Ask them, why is it that at a time when the foreign exchange reserves of the country are falling, why is broad money continuing to grow? And you can look up the data for yourself and find out where is that growth in broad money coming from at a time when the foreign exchange reserves are collapsing. And you will find out that it is the State Bank that for more than almost 3 years now has been pumping trillions of rupees of rupee liquidity into the system, especially at a time when dollars are draining out of the system. And the net result is that we are standing in the middle of an inflationary and a devaluationary cycle, the likes of which we've never seen in our history before. So at that point, then, people are necessarily going to adapt to what is happening. If I'm holding rupees and I run the risk of seeing the value of my rupees erode by more than it's ever eroded in decades in our history, I'm going to look for gold, I'm going to look for dollars, I'm going to look to pull out of rupee-based assets, I'm going to look to take the dollars out of, I will adapt to that environment.
Okay.
And it might appear that the adaptive behaviors are creating the environment, but they aren't. What's creating the environment is the fact that the State Bank itself has pumped this economy so full of rupee liquidity over a 3-year period of time and is continuing to do so, that the economy is now like a pressure cooker.
Yeah, that's the point you made earlier. Okay. Okay, last round of questions. Please go ahead.
So my questions, I'm Moeen Bartley, a little different. And the question is actually focused on our private sector, so the Pakistani private sector. Why is it that the Pakistani private sector is not really expanding outside, becoming bigger, becoming multinational? Is it a lack of ambition, or is it that Pakistan's a bad base to grow from? In India, we have many groups, business groups, expanding, going global. So what is it? There could be factors from the private sector side. There could be basically government policies that impede that. So what is it that is resulting in that not happening?
Got it. Thank you. Okay, so a question from this side. Where is the mic on this side? Tobias? Who's got the mic? Please, can you stay in the middle here so you can quickly run to people? Okay. Front row? All right, why don't we go this way?
Humayun Iqbal Shami from Pakistan Economic Forum. There has been said about the currency market value of the currency in Pakistan. But in my view, there is no real currency market in Pakistan. It's only a speculative buying, which is made by a group of culprits who actually keep on investing in currency, dollars, buying gold, buying the stock exchange. And then they create an artificial bubble here and they run away after getting a lot of profit. So it's only to gain profit. So I would like to know that for the last 5 years, all the successive governments have been doing the devaluation. So I would like to know at least 2 good reasons that what benefits we got from the devaluation for the last 5 years, where I can tell you about 100 reasons where losses Pakistan has suffered due to devaluation. So at least two points where what we got, benefits of that.
Thank you. Please here.
Thank you. I also have a question about the private sector. There's at least $2 to $3 trillion ESG investment market out there, and there is an early mover's advantage clearly on that. So I'd like to know what Pakistan is doing about that, because that's a window of opportunity, because it's something that is not completely captured in other countries going forward. Thank you.
Thank you. Okay, let's take a couple more. At the front here, sorry, who's got the mic? Can you just stay in the front? Thanks.
Bismillahirrahmanirrahim. Shahzad Ahmed Malik, President ICMA Pakistan. I would say, first of all, we feel that there is a problem of consistency of policies. Dagab Saab is sitting here, and he is a very experienced person of finance ministry and other. They have run that ministry. Problem is that which we feel that whatever policies they are implementing without thinking with the stakeholders like Chamber of Commerce and professional bodies. For example, in this budget, they have announced they want to say that there are too much money is parked at the property sector, and we have to curtail down. They announced a 7E section, you know very well, which is a problem nowadays. But I was sitting in that meeting and suggested that you want to curtail down this, then you have to give some option, like to give tax holidays or other benefits to the industry, so that money should be influx from the outflux from this sector and should be invested in the industry side, which is a major problem of Pakistan, either for the employment, either for any import, export, or related to that.
Okay.
But they have announced 7E section, and now banking in banks, whatever is the deposit there is some threshold. After that, its profit is on the normal tax rate from 10% to 15%, and now is the normal tax rate goes up to 35%. So when people are not investing in bank, they are not investing in property, and you have not given option to industry, then naturally whatever our colleague is sitting here said that there is a bubble in the market of gold and dollars. Naturally you are opening doors for investing in dollars and gold, and that price will be going up.
You're right.
Thank you.
Thank you. Good point. Okay, last two questions. I want to go at the back, since we've had several questions at the front. I'm sorry, because there are some people at the back as well. So you want to, okay, let's, that lady over there. Nadeem Sab, then I'll come to you. So, yes, youngsters more. Not an ageist comment, but yes.
This is Saira Khan from UOP. My question is, how do the businesses balance their growth objectives and prospects with their responsibility to preserve the environment and the natural resources as well? Like what strategies they actually adopt when it comes to the environmental protection as well? Thank you.
Good question. Okay, any there? Sorry, I won't be able to come to everyone. I'm trying to pick.
Thank you. It's me, Hafiz Muhammad Adnan, Assistant Director from National Transmission Dispatch Company. My question is, shouldn't we focus on the export of services? India, in the last year, fiscal year 2023, received $112 billion from remittances. I think not only we should focus on the services sector in Pakistan, like mentioned in the hospitality or tourism, but we should also frame policies that should support, export of services.
Right.
It involves, diplomatic relations as well as ease of, opening channels with many countries.
You're right. Good point. Thank you. Secretary Saab, do you want to come in?
Assalamu alaikum. It's
Mujtaba Memon. I'm Secretary Privatization. I'm a great admirer of all the people on the table. You are all prolific writers, and anyone who reads you clearly understands the issues and difference between net domestic assets, net foreign assets, why dollars is going, what are the issues. But somehow, in spite of having such brilliant people and knowing all the issues, we get stuck. We are not proceeding. It all comes to some elephants in the room, of course, I don't know. But how do we overcome that challenge? And then there's a lot of talk about our nervous system being broken by some leading economists. So where is that nervous system supposed to be? And how can we create that nervous system? I mean, we go after piecemeal issues, resolve that, don't resolve that. We keep fighting on export regimes. I mean, whether it should be import substitution or exports, we keep fighting upon fixed market exchange and that. But I think most of us, not everyone knows the answers, but we still don't progress. Could someone help us there? Thank you.
Thank you. Okay, last question from this side. Anybody who wants to come in? Okay, that gentleman's been waiting patiently a very long time.
This is Mehtab. I work for the news. My question is, as we are talking about the private sector, when the government is desperate borrower, where the choices left for the private sector to grow? And when Pakistan consider Baltistan and Unsustainable, NOCs, when there is too much powers given to these bureaucrats, and when there is a distortion, when NLC is the bigger company, FWO, when there is a distortion in the market, and when there is, we are not supposed to increase our trade with our regional partners. For India, for instance, India, Iran, or Afghanistan, or Central Asia. And when there is no linkages of private sector outside the world, how our private sector will grow?
Yeah,
thank you.
Good point. Thank you. Okay, let's try and address it.
I would like to take up the two questions about ESG, and I really love it that this is not mentioned in the report, and nobody. And these are two amazing questions. Thank you for that. I think this is really a good opportunity. And knowing my own company, we are listed on the stock exchange, and the biggest investor in our company, free float, is an ESG fund. But coming back to that, you see again the funds, international funds, they price into the volatility. They can't price it in.
Yes.
So, but we have, on the other hand, we have not really tapped into ESG funds. Reason being that we are not ready for ESG. First of all, our corporates will have to adopt the ESG policies, have to become truly sustainable and have good governance policies. Only then we can go and tap. So I think there is some push, and we need to push it further. About the young lady from there, about how does the company grow? I think it is a misconception because worldwide, I think in the past, the corporates were more focused on shareholder value. Now it has become to stakeholder value. And I think the record is proven that if you are more ESG compliant, you are more, you're following the ESG policies, in the longer run, you are more profitable and you grow further. Absolutely. So I think it should be taken as an investment and not as an expense. So it can help. But I think we, Pakistan and the corporates should tap into ESG funding. Thank you.
Fully agree.
Yeah, I just wanted to add to this because, again, climate change is a topic we all should be caring more about than we do, and it's increasingly front and center. I think what we've seen so far is a bit of a demand-led change. I don't think Pakistani corporates have proactively done as much as they needed to do. So you've seen changes in the textile space where, again, the EU and other buyers have demanded that. What we're seeing now is that it's becoming existential. particularly in the areas of agriculture, food production, if we're not incorporating how climate change is affecting our business models and we're not developing solutions for it, we're actually no longer going to be viable. So more and more, this is becoming a must-have, and we need to start finding ways to navigate through it. We haven't done enough, but I think we're on our way to doing that by necessity.
I'm starting to get very angry messages saying we have to wrap up. So let's just quickly, in 10 seconds each, respond to the question that I think the gentleman there raised. Why aren't more Pakistani businesses going outside of Pakistan? I thought that was an interesting topic. Perhaps you can come in on that. I think there was a question for you from one of the gentlemen, but let's just be super quick before they actually pick us up and throw us out.
So I think that because of the currency controls, you need permissions. As far as you see, I think it's very important. You have to have global presence. We as a company have manufacturing in Sri Lanka. We had in Bangladesh. We are about to acquire a US company which is having manufacturing in China. So we'll have manufacturing in China. I was just talking that we will be probably going into Jordan and Egypt. So there are companies which are looking outwards. Majority, 90% production will stay in Pakistan, but I think, I don't know why the other corporates are not looking at it. Maybe the real estate is still more profitable.
I'll take up Mujtaba Memon Saab's question at this point and leave the other question for Babar. Actually, I think he would be a good person to ask about why Pakistani businesses are not going abroad. But in response to Mujtaba Saab's comment, the reason we're not talking about solutions is because we fail to develop consensus on what the problems are over here. So until we have that consensus, there's no point talking about solutions. So if we're looking at inflation and devaluation as a problem, for example, just to take one example, and I believe very firmly in that, and the data shows it, and if people would only look at the data, they would realize that this is being driven by, that this is a 3-year-long process being driven by mismanagement of monetary factors stemming from fiscal and other things. But if people want to insist that no, all we got to do is arm twist a few money changers, shut down a few border crossings, scream at a couple of banks, and it'll all come down again, then the conversation cannot move to solutions. And yesterday we had our own commerce minister very confidently saying, we'll bring the rupee down to 250. And once we do that, we'll be able to reduce interest rates by 4 percentage points. So then it becomes the job of people like me to explain to him that, mister, these are actually inversely related to each other. You can't have fixed interest rates and a fixed exchange rate, both of them held artificially low. I mean, that's like trying to create a water car. That's like trying to violate the laws of thermodynamics. It doesn't work like that. Yeah. But until we're involved in those, bogged down in those conversations, we sadly can't move into a conversation about solutions.
Well, thank you. Good point. And I think we should probably try and wrap it up. This is a conversation we can continue for another hour or so, but thank you again. I think there was a few points I was making as we were going along, and the list has gotten much longer than what I thought it would be at the start, but let me just quickly share the points that I wrote down. So in reverse order, importance of ESG, how we mainstream that. I think in our note, you're right, there is scope to highlight that further, and I think we'll take that on board. I think the clear message on regional integration and access to market, again, is not something highlighted enough in the road. Otherwise, all these numbers will just remain numbers. Enhanced focus on SMEs, absolutely. I think there is some reference to it, but not to the level it needs to be. Lots of talk on sort of, if I can read my own handwriting, human capital development, cross-cutting issue, inclusion of women and participation in the economy, which is the point that you also made, energy sector reform, of course. I think a key issue that we also speak about in many forums is continuity of policy. First, having policies that are supportive, and then having continuity, whether that be on real estate and related taxation, which we all agreed is critical. I think the initial conversation on a managed road to liberalization, where the liberalization has to be the direction of travel. I think it's clear that Pakistan's experience is such that protectionism has not served it well on a longer term. So I think it's the how piece that matters. And moving wealth to productive sectors. I think those were the key points from my side. So let me again thank you all for the time, and thank you, the audience, for an excellent session. Thank you.